Most traders look at a chart like the Euro USD or Australian USD as if it exists in a vacuum. They apply technical analysis to one chart without realizing that every single Forex pair is had links to every other pair through a mathematical law called triangular equilibrium. Once you understand this concept, you stop analyzing charts blindly and you start predicting directional move across multiple pairs simultaneously without doing double the work. Here's how simple the mathematics really is. Take Euro USD and divide it by AUD USD. When you divide two fractions, you multiply by the reciprocal, in this case, the USD. The USD tends to cancel out each other completely, leaving you with Euro over AUD. Being that this is a particular currency pair of its own, it's not an indicator or an estimate, it's an absolute mathematical identity. The exchange rate of Euro against the Australian dollar at any given second is driven by the relative quotient of Euro USD and AUD USD. To make this much more practical, I'm going to give you a live example on the chart. This is the Euro US dollar chart, AUD US dollar chart, and Euro AUD chart. We're going to carry out the live mathematics right now. The current price of the Euro USD is 1.1450. We're supposed to divide it by the price of AUD, which is currently sitting at 0.6948. The current price of the Euro Australian dollar should be 1.6479 or thereabout. This is the Euro Australian dollar, 1.6476. That is a 3 pips, roughly 3 pips difference, which is absolutely incredible. Here's where it becomes a massive edge in your trading workflow. You don't need to analyze 28 currency pairs individually every single day. Let's say you do your structural daily analysis on Euro USD and you identify a clean bullish setup. Then you jump over to AUD USD and see a clear bearish setup. Without even opening the Euro Australian dollar chart, you already know its direction with near certainty. If Euro is beating the US dollar, the US dollar is beating the Australian dollar, then Euro is absolutely crushing the Australian dollar. Euro AUD has to become bullish. It doesn't have an option, it is just a simple math. Using this method gives you 3 distinct trading advantages. First, it slashes your analysis time in half while doubling your market awareness. Secondly, it pinpoints high volatility trades when the base currency is strong and the quote is weak. Cross pairs like Euro AUD don't just trend, they explode in that situation. Third, it acts as a filter. If Euro AUD is bullish and AUD USD is bullish, then Euro AUD will simply be in a range market because both sides of the equations have balanced out. You instantly know to step away from that cross pair immediately. To wrap this up, stop treating currency pairs as isolated charts. Look at the legs of the triangle. Pick 2 major tied to the USD, assess their relative strength, and let the mathematical equilibrium dictate where the high probability opportunity will occur on the pair. You can also inverse the situation by studying the cross first and finding out which of the pairs is behaving better or far worse, and then you extrapolate it against the US dollar or the major and you figure out which one to trade easily. However, before you dive into your chart, you need to also know this reality. You need to understand why this only applies to Forex. In the stock market, Google, Apple, and Amazon are independent companies. Google's stock price does not mathematically dictate Apple's stock price. They are both priced individually in the US dollar. Forex is completely different. It isn't an absolute price. It's an exchange ratio of 2 currencies against each other. Because every pair share a base or a quote currency with another, the entire Forex market is a closed mathematical ecosystem. If pair A moves and pair B moves, pair C has to balance the equation. If it doesn't, institutional algorithm immediately arbitrage the differences until equilibrium is restored. If you learned something new from this video, I would like to tell you hit the subscribe button, like and share to people who you think may find this trading knowledge valuable to their trading career. It would really help. Thank you very much. See you all in the next one. Peace.